Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Thursday, August 1st, 2024. It's 2:48 p.m. Eastern Time, so we've got a little bit over an hour to go in the trading day. Wanted to get at least one more update out to you today. Talk about the markets, where we're going, what's happened today. So, in a nutshell, the price action today only kind of confirms everything that's been building up now technically for months. The overbought conditions, the divergence, the excessive bullishness, excessive complacency on put call ratios, sentiment surveys, and the fundamentals, the macros, with the economy rolling over. And then now what I'm talking about is that the fade today from top to bottom is about almost exactly 4%. You don't see that in a typically in a bull trend. That's a pretty hard rejection off today's highs, which of course was right at resistance. So the technicals are playing out to the T. Now what did happen today? We blew right through support. So I got a post out to you earlier today. First post today was boom. Look, if you missed it yesterday, here it is. We're right at that same bounce target, objective short entry. And I specified active trader and swing trader. Active trader could have faded the pop and the open, which certainly worked out. And then swing trend traders, again, is a scale in zone, scale in from where we were yesterday's close as well as this morning at resistance. But what I wanted to point out here is, and we will most likely bounce by the end of the day. I'm going to show you where we're at now. So let's start with the bigger picture. This is the daily chart of NQ. These are the targets for the NASDAQ futures I laid out on the 10th, I believe it was, of July, the day we peaked back here. Before we even had the bearish engulfing candle, we went on to put that, and that in itself is a high probability sell signal trend, long-term swing trade. It marks a potential top, which right now, and unless proven otherwise, I'm going to go off that is the top. And that kind of, again, gives me that mindset where you have to pick a team, and if it puts you in that mindset that this is only the beginning of a much bigger drop, then it puts you in short the rip mode, and kind of looking for more downside. Whereas, when you're in a bull trend, you want to buy the dips and hold out for new highs. And on here, you want to sell the rips and hold out for new lows. In other words, so we'll probably take out, as I haven't waffled on, the T4 level that was hit last week. That was on, Thursday, I think. Again, on Friday. So we've been dancing around. Again, these are the levels laid out back here at the highs. And so this is the reaction. We've had a reaction in time. It's been, this is a daily chart, 1, 2, 3, 4, another test, 5, 6. We were up here this high today and got a hard rejection, and that's a single day. Again, that's a top to bottom 4% reversal. However, as I like to say, and I often do, support is support until unless broken. So despite the fact we blew right through the first support level, maybe even the second, I'll get to the intraday charts in a second, we're at support. Apple and Amazon report tonight, and from this point, I would put high odds that we're going to at least, in worst case, park on this support level, but most likely rally off it into the close as you get some short covering. But again, maybe there's a lot more trap. I know there's a lot of trap bulls overall in the market, and days like today are just a proverbial kick in the nuts, for the bulls. Yesterday was, they figured the worst was over and it's all right, road to new highs. And hey, maybe it is. Again, I'll repeat this unless this level's broken, that doesn't open the door to T5. We got to take out T4. I'm going to go to QQQ in just a second. But that kind of price action, that kind of hard dump, it does help build the case. That's all. And again, Apple and Amazon, as I've been saying, have the potential to either give us a little more upside or just continue. We've had plenty of consolidation here, so they certainly have the potential to continue the downtrend. And they started today. Again, it was just on an ISM number. Surprise, surprise. We've been seeing weakening economic weaker than expected economic indicators that I've talked about, the important ones rolling over for months now, but the market shrugged it off as, oh, that's fine. If anything, it's bullish because it's going to help give us that rate cut we want. And now they realize, be careful what you wish for, because all the rate cuts in the world have never staved off or prevented a recession. All right, they're only, you get the cuts when the recession has either already started or is about to start. So now the market's seeing that. So that's that. Let me show you QQQ. QQQ gave you these targets initially on on a daily and a weekly chart. T1 was the trend line. Again, this is kind of my busy board, but there's the uptrend line right there. And T1 was the primary uptrend line that was hit. And then we're back on it. So again, let me reiterate. Support is support until less broken. So we had a couple bounces, but we haven't taken it out. So that still leaves a possibility if Apple and Amazon, if the market likes what they're selling, we could go up. And I already gave you this is how it looks on the daily, my kind of bounce target re-short range. And we hit the bottom of it today. I shared my thoughts for swing and trend traders. In my opinion, it's not worth trying to hold out for that push all the way up, because you may never get it. And then that leaves you kind of out of a, what could be the biggest, most profitable short trade, as far as trend swing trading in since all the way back in the beginning of late 2021 into the October 2022 lows. So that's where we're at. Let me show you on a 60-minute chart. So this is a 60 right here. This is the 15 I've been sharing, and you can see, we're right back. Again, this is the longer term support. It's also near term support, divergent lows. We're right back there. But this is typical bear market / correction not over yet kind of action, that hard fade. Again, you can measure it out yourselves. I'll show you how you do that on TC2000. You just grab this morning's highs, which was right here, and you grab the spike high. You grab you go down, hold your mouse. It's now 4.12%. So again, that's by far one of the biggest intraday reversals we've seen in a while. And that typically is telling you we're probably a lot more to come. It's pretty darn bearish stuff. So the levels, again, those are the levels. So we smashed right through that first support level there, right through the second support level. I gave it to you on the NQ15s as well. There's the 15 right there. And look at that beautiful rejection at that downtrend line. That's where we were this morning when I got the charts out to this, I think the 60-minute chart here. That was my bounce target right there, that minimum bounce target range. And it came in perfectly with the downtrend line off the highs, 1, 2, 3, 4, 5 reactions. And that is one heck of a rejection right there. So it tells you there is a lot of trap longs in the market, and they're nervous. They want out in front of Amazon and Apple tonight. Now, again, we're at support, so, and 4% is an extreme for intraday reversal. So, is it possible we drop more into the close? Possible. Is it probable? No. What's more probable? A relief rally, short covering rally for those that intraday, day traders like me, active traders. As I mentioned, added shorts at the high. In my active trading account, admittedly covered too early, looking for a bounce there, but also had a lot of, told you, been scaling back into adding to KRE shorts, puts on NVDA yesterday, shares on NVDA, which I just have covered. So I had, offsetting short positions too, even in that same account. And those will probably bounce. Let me get to those. Let's get to the big. Well, no, I already covered Apple, Amazon, NVIDIA, everyone else today. NVIDIA, this is what it looks like here. NVIDIA is at support. So NVIDIA, there's a lot of stuff at support right now. Hence the reason we'll probably get at least a bounce today. Where NVIDIA, let's say you want to day trade NVIDIA right here. Look about a 4% bounce if we get. If they start buying it up and covering before the close, up to almost about 111 right there, give you 4% bounce. Apple's reporting, so you're probably going to have more nervous, profit taken out of that. It may, if the Qs rally in the last hour of trading today, remember that gives a bid to almost all those Mag 7 stocks, because every dollar going into QQQ, roughly 10 cents is going into Microsoft, 10 cents into Apple. So now you can still have overwhelming selling that overrides that. But I'm just marking the video because I see it. Alphabet, they've already reported. It's kind of a meh chart. I mean, it's like I covered today. It's clearly bearish longer term, recent breakdown. So, can't make a strong case to step in and buy any of them. There's Meta post earnings. A lot of the pop has been faded, but it's still green today. Everything else is red. Tesla, remember, Tesla was just a textbook bear market rally right back to the primary downtrend line off the 2021 highs, and as expected, rejected there after 3 weeks of trying to get through there. Every intra-week attempt foiled, only to have it close back down on or below the trend line, followed by a pretty impulsive rejection. Textbook bear market action right there. So what next? Whether it's today, really tomorrow, like I said, they're probably going to park it. And even if we drop any more, we're down almost, again, there's no set limit how much. There are limits where circuit breakers kick in, but I don't think we're going to see circuit breakers today and for the Apple and Amazon. I think most of the selling's done for today. So they're going to park it around those long-term key support of my price targets on NQ and QQQ. Then we can clearly take those out, especially on a solid daily closing basis, as early as tomorrow. Depending on how the market reacts to Apple and Amazon, and that's pretty likely, I think, or maybe next week could be, even if it's 3 weeks later, if we bounce a little more for 3 weeks. But I'm leaning towards it happening quicker, only because of everything I've been talking about for months, all the pent up, the excesses and ignoring. Not ignoring. Divergences can build. Like I said, they're not a sell signal. Overbought conditions, excessive bullish sentiment, my low volume indicator. I mean, I can sit here and probably talk about 15 reasons that support, again, the strongest case I've made. So what happens is stocks, like I say, tend to fall faster than they rise. And when you have a bubble, when you have a 1999 bubble, which this is, it's just AI in place of .com, the turn, when it finally comes, is swift and fast. They don't let the longs out. They don't let the shorts in. And I'm going to do what I do. I'm going to try to game the squiggles. And that's the thing. You're going to get these mean reversion trades on days like today when you're about, week, what knocked it down. You can see the markets at 10 a.m. started, like I said earlier, with the release of the economic data that came out. And that's when, we were up at that point, and then boom, nothing but selling since. But again, that's not end of world days kind of news. It's nothing new. It's just a trend that's been, I and others have seen. But now it's all of a sudden important to the stock market, despite the fact it's going to almost solidify that September rate cut. And it's funny how that works now, right? Like I said, it's a paradigm shift. Whereas recently, up to recent months, that would have been the stock market would rally on weak ISM. Okay, again, how to trade it. Remember, you're a long-term swing trend trader, or if you do both like me, you got different accounts. You got your longer-term accounts, IRAs, or whatever your money's parked in different accounts. Then you should have been, scaling back in on this bounce back up to the, minimum and kind of preferred target zone up to the max right there. So if we do get that you could have been all in today or partial today waiting for this. But like I said, plan B, if you never get that, where are you going to add? And so that add would be really once these levels, again, that we close that clearly go. And you got to wait for Apple and Amazon. Because once Apple and Amazon are out of the way tonight, and really remember that, how they trade tomorrow will be the market's true reaction. After hours doesn't always stick. Quite often it doesn't. It's not the lasting reaction. So then the markets are kind of free to go in their own direction. Friday, of course, is a Friday, so you get 2 extra days of overnight risk. So really, by next week, we're going to know, and these levels are going to be, if they're clearly taken out, then that's where it's objective, in my opinion, to increase short exposure at that point as well. Like I said, so 2 ways: either another, should Apple and Amazon rally and have another big green day? And again, that's the nature of volatility. I've said that repeatedly, that when this is why you watch the VIX, this is why you watch these breakdowns, these sell signals. It's a pretty easy trade. When you get the VIX volatility expanding, you can make money on both sides. Typically, it means stocks are going down, so you want to favor being short. Your swing positions and trend should be short. But as an active trader, know that the big, like I said yesterday, was a great example. The biggest up days come in these periods, bear markets and corrections, and so do the biggest down days. So you just gotta be nimble, and and if you don't know what you're doing, and I'll tell you, if you're over positioned right now, you have too much in index shorts or individual stock shorts or any position, they're going to probably shake you out unless you have iron fists, and then that's not always a good thing because you don't know exactly which way things are going to go. So just in other words, adjust your position size to the volatility and to the charts. So the takeaway is, again, we're even though we had a huge reversal today, it just took us back to the same support level we were at the other day, the same support level they bought the crap out of and gave us that 5+% rally over the last few days. However, we already hit it once, and the way my price targets work, I list multiple targets because upon the initial tag of each target, a reaction is likely. After that, not so likely. You can certainly get another reaction. Maybe the support level holds and never gives way, and this is it for the correction. We go to new highs. However, it's already been satisfied in quite a bit, and the bounce has been, relatively lethargic. Last time we hit that trend line right here, you never look back. That was it. You had hit it on this candle right here on April 19th, and it was a nearly unidirectional rally with just a couple little corrections for about 18%. This time we hit it, and the buyer stepped in as expected, but gave us that little bounce, and all of a sudden they're selling it pretty early. So, all right, let's let me look at one more thing, couple more things for you. Let's update you on the VIXY. I think I updated that. I did yesterday. Told you, look, there are going to be pullbacks. We're able to initial tag. There's another good example. These are the targets I gave you when we were right here the day before the VIXY ripped, short-term VIX. We hit T1. We had a pullback. Actually, we went through T1. My bad. We went through T1, hit T2. Remember, the market was still going down. Then had that pullback, hit this uptrend line, and then boom! Look, right back to T2, just like the markets at support. So this is not mere coincidence. The VIX, or at least this short-term VIX futures ETN, is now testing the lows that it hit the other day when the market hit that same support. And these price targets are they're the inverse of the price targets on the downside for QQQ. They're the upside resistance levels. And so that was hit. So that opens the door, again, whether we have another pullback or not. The next time we come through, a solid breakthrough there. Look, we're not going to go to T3, T4, or 5, especially these higher targets, unless we take out the support levels on the Qs that I just covered now. So I know I'm repeating a lot of the same things, but that's where we're at. We're going to close at support. Apple and Amazon could explode to the upside off that support just because they sold it down hard today. They didn't do any. There's really no change in the technicals from that daily chart, or even again I'll give it to you on the weekly as well. Let me go back to that. It's just a simple another test of support. Sometimes you hit support and you're off to the races. Sometimes you hit it multiple times. This is how it looked when I first gave it to you on the 26th of June, I think. I gave it to you on a weekly here with SPY, QQQ, and NVDA. And there's the trend line. We hit the trend line. We hit it again. We're still on it. And again, you have the trend line and price support right next to each other. 449.70. We'll call it 450. And so that's it. So there's still the potential for rally despite this hard knockdown today. And when you look at it on the weekly chart, you don't really see all that crazy, volatility in here. It's just one. It is a pretty good sized candle, but it's nothing huge. Last week's candle was bigger, as was the one before. So there was a big, red candle, then boom, nothing but green sticks after it. So that's it, guys. Hopefully that drives home the point that you want to open the door to T2, T3, and beyond. You've got to take out this level right here, about 449.70, and that would be an objective add-on, new short entry, as would any pushback up to the top, but not above the top of my bounce target zone. That's how I view it. And then SPY on the same day, June 26th, I believe, I gave you this with my final market top range. It ran from this purple box from here to here. We hit about smack in the middle of it. So split the crosshairs and broke down shortly after that. You had a minor trend line break that week, followed by a more significant primary uptrend line off the October lows. clearly below it. We didn't have to squint last week to see the breakdown, and we certainly don't have to squint this week, but we're not even to my first target on SPY. So that's just a support level, and that's the first target. And again, these targets don't always have to align, support here. As I said, I've been trading QQQ, made that very clear instead of SPY, but now it's, like I said, time to re-engage IWM as well. 4.82% rough drop versus QQQ's drop off the highs of 9.5%. So that's, it's one thing to just say I'm going to short the market. It's another say which market to short, and I've always done that. We did that same thing back in the January 23 lows, clearly saying QQQ because the big tech's going to outperform. They're the most bullish charts, and it vastly outperformed SPY to the upside, and it's the same thing on the downside. So it's, if you're shorting SPY, you're shorting grandma's index. It's got utility stocks, dividend-paying blue chip stocks, healthcare, defensive issues, utilities, and all that other stuff. And so when you have a hot market, you want to short beta, you want to short tech, and that's what QQQ has. All right, and then the other one I gave you, of course, was NVDA on the weekly, and that one still has a little more downside to that first weekly target, and still a lot more to these other targets. So that's it. I already covered Apple and everything else and the other thing, and I just want to leave this here with you. We're at support. A lot of things are at support. That SMCI, which is that sister trade I had to NVIDIA, shorted back here and then here, and gave you one sole simple price target back then. And we're flirting with, told you over here I covered it, but I'm ready to get back into that one soon. I would love to get one last bounce. We just may not get it now. We might have had that last. Well, we had the last hurrah a few weeks ago in the stock market with the first counter trend rally. I told you that was the final hurrah, and it was so far. But this is a big support shelf, and the reaction so far has been extremely muted. It's been we've certainly had a reaction, but in time, not in price. It's been just hugging this level, 690.46. It's a very, very important level, and the 200-day moving averages. And when it goes, like I said, it's a clear shot. I won't even cover anything unless I see something crazy in the market. I plan to just hold this one down to 355 once I get back into it. I'd like to see one last hurrah out of this one, but it may not give it. And it just kind of shows that this was NVIDIA was the poster child of the AI hype, but this one was considered, like I said, its sidekick. It's Robin to NVIDIA's Batman. The CEOs are buddy, and this one's also supposed to benefit from the AI wave and kind of in the heels of NVIDIA. And so, nice. Oh, just to measure it out for you. Well, let's measure out the high so far and show what happens when you buy the top of a bubble or short it and turn it into profits. That's down 42% already, and if it hits that price target, it's going to be down 71% from the highs. I think it's still a high probability target to be hit. All right, let's see that late stage rally. Here we go. QQQ, 5-minute chart, trend line. This is the best trend line I can give you. We've got some divergence here. And like I said, they're going to, day traders are going to cover shorts and get out of the way of Apple and Amazon. It's a mean reversion trade. If we were up, had reversed 4% or up 3%, I'd tell you it'd be a mean reversion to the downside before the close. Now, I said it this morning that they would take profits. The market would drop most likely before, with nervous profit taking the Amazon, Apple. But we already got it. So now you can kind of reverse it. We did blow by the first couple support levels, but that doesn't change my outlook for a bounce into the close. So I will stop it here, get the video out to you, and remember, just differentiate, compartmentalize short term. And I'm on a 5-minute chart like I am here, a 15-minute chart, or even a 60-minute chart. That's the realm of the active trader. If it's not your wheelhouse, focus on the long-term stuff. If anything changes in the technicals and or my outlook, I will let you know on the bigger and longer-term targets. This has been Randy Finney with Right Side of the Chart. Have a great day.